I'd like to call a meeting of the Finance Committee to order. It's August 6th. And I need to have a roll call to open the meeting. So I move to open the meeting. I need a motion and we can have a roll call.
Make a motion to open the meeting of August 6th.
Second.
Okay. Okay, Ms. Hartman.
Yes.
I'm Mr. Banfield, yes. Ms. Ortner.
Here.
Ms. Reynolds.
Yes.
Mr. Hickling.
Yes, present.
Mr. Patel.
Yes.
Ms. Zal.
Yes.
Mr. Guariello.
Yes.
It's unanimous. We have a meeting and here we are. A couple of rules of engagement. If the public is joining, they will not be joined to the meeting in a visual mode. They are isolated. They're off to the side. We have a large committee and keeping our faces organized and together, we use the webinar style. If you'd like to be recognized during a public comment moment, use the raise hand feature of Zoom. You will be recognized and you'll be able to join and make your comments. So unfortunately for public attendees, they are unable to see who the other public attendees are. It's just a feature of the webinar model. But be aware that we can see you. We are aware that you are there. And if you raise your hand looking for recognition, someone will call on you. Okay, so that's the Zoom caveat. And we're gonna get started this evening. The first item on our agenda is minutes as available. I don't believe we have any minutes as available. There were minutes published for the joint meeting that we held, and those where we were trying to just do some work around organizing for town meeting. Those minutes have been created and we need to vote on them, but they're not in front of us. I need to get those distributed to everyone, and then we can review them and vote. But they're out there. So
What was the date on those?
Oh, that's a good question. When did we have that meeting? Mary, you and I met first with the select board and with two people from the select board and the moderator, and then we all jointly joined.
Oh, that's right. When was that?
Yeah, when was that? I want to say it was like the 23rd of July, something like that. My memory is cloudy, but maybe my phone will tell me. I don't know. But I haven't distributed those minutes yet, so we don't have anything to discuss.
Probably the 23rd. We had a meeting.
Yeah, I think it was the 23rd, or maybe that was our meeting. Not sure. Okay, so the next order of business on the agenda this evening is a budget update. And we have the town manager here as well as Carrie LaFleur, our finance director. I'm not sure, Stephen, whether you want to kick it off, whether you want to just hand the baton to Carrie or how you want to handle it. So I'm going to
I will do the first and then the second. So, and I don't know if Carrie, you're going to share the screen.
I am. I practiced before you came on, so see if I can do it again.
So as she's doing that, I just, you know, we've been talking a lot about what are the impacts of COVID-19 on the budget, certainly on the local economy more broadly, but also on the town budget and by extension the state's budget. We know that local receipts have been hit hard by the pandemic, especially meals, lodging, you know, those types of taxes. There's been obviously a significant decrease in economic activity, and that has hurt those revenues. We had been preparing for significant cuts to state aid, but the state announced last Friday, that they were going to hold the line, the FY20 numbers for UGGA, unrestricted general government aid, and Chapter 70, which is you guys all you know all this, which is school funding. And so that we had been planning for reductions in both of those, and that kind of reshuffled the deck for us. And I know some of you were at the select board meeting on Monday night and heard basically the same presentation. And I think I would just categorize it generally by saying, Carrie and I, took a conservative approach to the estimates of revenue. We took a conservative approach to the, the essentialness of some expenditures. And we wanted to be pragmatic about the reality of not needing 12 months of a fiscal year in funding when we're only going to, in all practicality, have a 9-month year because of the date of town meeting and when we get our appropriations. And so we wanted to make selective reductions that did not, we prioritize continuing operations over everything else. So we'll get into the details of some of the reductions we've made. But like I said, I think we took a very conservative approach. We wanted to make sure that we didn't overshoot the mark. And what you'll see tonight actually represents some funds actually left on the table to make sure that if anything unforeseen happens between now and town meeting, we have some room to further adjust. I will, Carrie, I don't know if you want to report on the Q1, early returns on the receipts, but that seemed like some good news we got today. So I guess I would now pass the baton.
Okay, thank you, Stephen. And as Stephen mentioned, I did send out some information on the first quarter tax collections, and it was really very favorable. And like with the last quarter, the processing of the payments is a little slow. We use a lockbox service, and they are definitely a few days behind. So we are still processing some on-time payments, and that was something, a couple of months ago I had talked to you and the select board about, that I was, anxiously waiting to see what those returns would look like, and so far they're very encouraging. So to kick off this presentation, the first thing that we needed to identify was the magnitude of the problem. And as Stephen said, we had finished putting this presentation together. We still had a gap to close, and then we got the very positive news from the state that the state would be level funding education aid and unrestricted general government aid. So that had a huge impact to the magnitude of the problem. But we're still facing what we believe to be close to a $1.9 million loss of revenue. And this is over the original fiscal 21 projections. So the projections that were used when you developed your guideline were a 3.1% increase over fiscal 20. And now we're looking at about a 1.45% increase over fiscal 20. There are 4 categories of revenue: property tax, state aid, local receipts, and available funds. I will go into some of these categories in a little more detail, but on a high level, the property tax increase that is being proposed, that is different than what you saw when you put your guideline together, really just is an increase in exempt debt to account for the permanent financing of the middle school feasibility study, which we did in June. So we knew rates were very favorable, so we went ahead and we permanently financed that project. And so that has been added as exempt debt. In terms of state aid, level funded for Chapter 70 and unrestricted, but we are still projecting a 20 to 25% decrease in other minor accounts. That results in essentially level funding. It's about a $20,000 increase over fiscal 20, but much better than what we had expected a couple of weeks ago. Local receipts, there are some significant reductions projected, and I'll get into that a little bit more in a couple of slides. And then one additional consideration is the ability of certain of our enterprise operations to support the internal charges from the general fund to cover costs of services provided to those business operations, such as payroll, banking, human resources for any recruiting, and general management. And so what the town manager has decided to do is for 2 of those operations, BD and recreation, to zero out their contribution to the general fund for services, and that totals $288,000. So that is in addition to the other projected decreases. So in total, again, almost $1.9 million.
Hey, Carrie, it's Chris. I'm sorry to interrupt you. So the thing you just mentioned about BD and the rec center, when you say in addition to, is that not reflected in the numbers that we're looking at? Is it something we have to add in?
No, I'm sorry. It is reflected.
Okay, thank you.
Yeah, what she's saying is we had a deficit based on local receipts, and we, the magnitude of the problem, and we somewhat escalated the magnitude of the problem by eliminating those general fund contributions for BD and rec. And I think for obvious reasons, I mean, BD was forced to close and rec programs were closed for a long time, and it's been costly to bring both of those operations back online with limited capacity. And we want rec programs and BD and the BD Center to be around for a long time, and requiring those contributions when they've been hit really, really harder than any other department, quite honestly, just didn't make sense. So that is included here, but that's why it was an add-on to the deficit that we were confronting that we consciously chose to do.
So a question then, to be clear, those are added into local receipts, or are they the available funds line, which shows a deficit of 288? Is that where the BD and the rec center?
It is part of available funds.
They are in available funds. Okay.
Yes, and that's the only adjustment to available funds. So, was there another question?
Can you just go back? I just want to make sure. So right now we're projecting or estimating 115.7 million in revenue, correct?
Yes.
Okay, so it's slightly higher than fiscal year 20, clearly, but less than what the guidelines had called for.
That's correct. So I don't know if can you see my cursor?
Yeah.
So here is when you talked about guidelines, the increase in revenue was 3.5 million for fiscal 20, and now we're this, if you compare to the original guideline and this over fiscal 20, 1.6 over fiscal 20.
Yeah.
But still almost 1.9 under where you were at guidelines.
Sure, and so I guess okay, fair enough. Okay, thank you.
Okay, so state aid, as we've mentioned, right now we're still projecting 20 to 25% decreases in some of these. Oops, I'm in the wrong column over here. So this decrease here, $143,000. This is the pilot payment that the state makes to us for state-owned land in town. So it may be that we're still being a little bit conservative here in terms of state aid. So we may net, some additional funds here, but we really won't know, or it's not likely that we're going to know before town meeting.
Mm-hmm.
John?
So Carrie, this was the line that I was wondering about. This is not a property tax per se, is it? Can you give an example as to what this is? So
any land within the town of Concord that is owned by the state, and I'll exclude the prison because the prison we receive some funds separate, but any state-owned land, the courthouse, facilities like that are owned by the state that are not taxed, they make a pilot payment, a payment in lieu of tax to the town, much like the housing authority, or I'll leave it at that. But is that, you understand?
That's thank you. Yes, that's fine.
Okay.
It was just the third biggest category, and we hadn't discussed it much, so that was my question.
So it's really, I think a lot of us were surprised to hear that the state was going to level fund, and you can see we're actually receiving $185,000 more in 21. And these are numbers, the state has already published what is coming to each city and town for Chapter 70 and unrestricted aid. Many of us were very surprised at the level funding because we originally projected between 10 and 20 or 25%. I had originally been carrying a reduction of 20%. So this is very significant. It would still be unusual for the state to decrease any state aid account by 20%, but you know, I'm not sure how they can level fund and add to certain categories without severely impacting others. So again, you know, we're projecting right now $20,000 over fiscal 20.
Can I ask a question about the unrestricted general government aid?
Sure.
That is indicated here that comes from the lottery. And with the pandemic, people can't get to the 7-Eleven and buy tickets. I assume that the actual inbound for that is down a lot. Maybe I'm missing something, but my understanding is that the receipts for the lottery itself are way down. So,
yeah, the state hasn't done a lot. I haven't seen a lot of like actual data from the state about the current state, about their finances and the state's budget. You know, they're working on a 1/12 budget as well. It was a policy statement that they made about level funding UGGA in Chapter 70, not a budget document that came out.
Okay.
And so what I have heard is, you know, the state's, what would you say, 44 billion in budget, and they're looking at a $6 to $8 billion shortfall from probably all types of sources. So,
yeah.
As Kerry said, I don't know how they're going to do it, but you know, and they haven't said with any level of specificity.
Okay.
Quite honestly, it's for them to figure out.
Yep. So, but it's just annotated here as saying it comes from the lottery, and as a revenue source, that's way off, I'm sure.
I think I should probably take that off. I put that on because it used to be that all of the lottery aid was distributed to cities and towns, and slowly they've chipped off an amount for this project and that project, and it's not, they do a lot of advertising about what the lottery gives to cities and towns, but it's not the amount that was intended when the agreements were made. So,
okay. All right.
So local receipts, here is our biggest issue. These are all of the permits, the fees and charges that we levy locally for services, the excise taxes, motor vehicle excise tax, the rooms and meals, and those things. Any rental income, licenses and permits, building permits, alcoholic beverage licenses, any fees that departments charge for any of the work that they do. So we are now projecting a decrease from the guideline of over 19%, $1,674,000. So it is very significant. And I wanted to look at or give you a little more detail. And this slide is different than what was presented on Monday, because on Monday, I think it caused a little bit of confusion. So the bottom graph is the 4 categories of local excise tax, fiscal 21 estimate comparison to budget, to prior budget years. And the top is the estimate compared to actuals. So there are very significant decreases. The 21 revised estimate is, for this category, 31% lower than what you were looking at guidelines, or $1.5 million. It is now still 30% lower than what we budgeted a year ago. And it is $693,000 or 17% lower than what we collected in fiscal 20. And if you look at this next chart,
Carrie, can you just, real quick, the three of them, I understand. Jet fuel, I don't understand. Can you just give me a quick?
Oh, jet fuel. Okay, so this is an excise tax on the fuel that is sold at Hanscom.
I figured that was it, okay.
Because we are a border community, we are entitled to a share of excise tax.
Oh, okay. Thank you.
So Carrie, I'm sorry. Can you go back to the last page? I see budget for fiscal year 20 was 4.8, and we actually got 4 million.
Yeah.
So $800,000 shortfall. That was, I guess that's the COVID impact.
It is, and that's demonstrated more on the next slide when we look at the meals tax.
Just the question, maybe it's on the next slide, but what assumption are we making about when the economic impact from COVID will sort of decrease and things will return to normal? Are we assuming it stays through all of fiscal year 21?
No, because I think, you know, I couldn't say we're projecting through that it's the first quarter or the first 2 quarters, but we do expect to see some rebound. And I think maybe if we just look at this, and this just pulls out, it eliminates the motor vehicle excise tax because we don't necessarily expect to see a problem there. But if you look at the room occupancy and the meals tax in particular, it's interesting to see what's going on. So these are taxes that are paid by businesses in town that are subject either to room occupancy or meals tax. They pay to the state, and the state returns those receipts to us, or the portion that's allocable to the town, to us on a quarterly basis. The quarters are not quite the same. They're a month behind our traditional quarters, and I think that's important to look at. The trouble that we have here is we can know who is registered, what businesses are registered to pay the taxes, but we don't know what they're paying. We don't have any visibility into what they're paying on an individual basis, how that's calculated. So it's very hard to do any sort of analysis here. But I think what is interesting, if we just look at the room occupancy tax for the last fiscal year, the amounts that are highlighted are in the lighter color. These are, you know, obviously lower than the prior year. And the room occupancy tax all the way back to June of last year was lower than what we saw in the year before that. And that doesn't make much sense to me. And if you look at here, the fall quarter, which is typically very busy for us with tourism, we're substantially behind where we were a year ago. The darker purple, that signifies we were ahead of where we were the last year. So that makes sense. You know, before the pandemic, that the meals tax was higher, you know, was higher in all of the quarters and only fell behind in the fourth quarter. So that makes a lot of sense. But Parashar, I think to answer your question, even in the fourth quarter when things were awful, there was still tax being collected.
So yeah, I guess this is a little bit difficult to follow because I would have expected Q1 to be July, August, September. I'm not sure why we're looking June, July, August, for example.
Because that is the state's quarter for these taxes. Is
that when we recognize it?
No, that is how it is reported to us. So the first quarter payment is for receipts that they collect June, July, and August.
Yeah, and I was just trying to establish some seasonality even in the prior years. It's kind of hard to figure out the seasonality this way, but that's fine.
Yeah.
Q4 for 2020. And those are actuals in the last column, the 36, 15, 42?
Yes, they are.
Looks like we don't get that many winter visitors, as many. The
Yeah,
room
no, I get it. Yeah,
goes
no,
down, you know, pretty healthy clip.
it was interesting, just even fiscal year 20 back in June of last year. It just used to have been a drop in room occupancy that continued in the following 3 quarters.
Yeah, and I think, you know, I just have the 3 years. If you go back to the actuals, you know, you can see the room occupancy. The jump up here is when the hotel on Baker Ave Extension was coming online. It was probably more here and here, or for sure it was online 100% of fiscal 18. So you can see, you know, we collected an awful lot in fiscal 19 in room occupancy, still only projected $700,000. And it really has to do with the timing that we're putting these estimates together in September, October, you know, for the following July. So we don't have a lot of this data. But we are, you know, again, still projecting a pretty hefty decrease, 1.5 million over the original projection in local excise taxes. And then the other decreases is in licenses and permits. Most of the revenue in this category comes in the way of building permit receipts. And there definitely has been a drop off of that, but I have to tell you, when the assessors inspectors went out after, you know, we sent them back out to start inspections, I think in the beginning of July, they were really amazed at the amount of work that had been completed during the shutdown period. So we don't necessarily have a lot in terms of licenses and permits coming in the first month or 5 or 6 weeks of the fiscal year. So I think we're in good shape there. I do think we're going to see some decent activity in licenses and permits. The real estate market is very hot for anybody, you know, following the market. I think it's stronger than it's ever been. And, you know, typically people buy houses and then the next thing they want is a new kitchen. So that's a building permit receipt for the town.
I'm sorry, if you could just go back to this one right there. So it almost seems like we're assuming $300,000 in the excise taxes. Is that correct? Total?
In
for fiscal year 21?
For room
occupancy, 300,000. Yeah. That almost, I understand you're being conservative and maybe that's what it is, but that does seem to be pretty conservative, right? It assumes implicitly that we're going to take a bigger hit and it'll continue all the way through the end of the fiscal year.
Yeah, and you know, it's really hard to figure out what is, you know, what's the best estimate right now.
Well, I mean, you're trying to apply a financial estimate to a public health estimate. What is the status of COVID-19 in the 3rd and 4th quarter of FY21?
Yeah, no, it's not a criticism, Stephen, right? It's just a statement. And I'd rather be conservative than otherwise. I just wanted to understand that that's what was going on.
Yeah.
Well, I mean, I think that's the thing. She in one of the notes, she says it's difficult to analyze because we just don't know. Those excise taxes depend entirely on the status of COVID-19.
Yep. Yeah, no, that's fine. I just wanted to understand it.
Carrie, can I interrupt for a minute? This is Mary. I want to go back to the outline, the very first slide for a minute, okay, so that I understand the outline of what we're doing here.
Yeah.
So, okay, what I'm looking at here is when we started after the guideline, we thought we were going to raise so much money from property tax, so much from state aid, local receipts, available funds. And the amount we were going to raise from property tax assumed a percent change of 3.91%. Is that, am I reading that correctly?
Yes, and that would include existing base, new
Yep.
growth, and exempt property, exempt debt service.
Okay, so the existing base embedded in that 3.91 was the 2.8? That was,
Yes.
okay, that's all I wanted
Yes.
to know. Thank you very much.
Okay, so that's where we are. Oh, Christine.
Sorry, I just have one question to follow up to your point about the rooms tax. Are you going to try and figure out if that's right, Carrie? Do you think it could be an error somehow?
So as I said, I don't really have any way of figuring it out because
But the state does, right? Could you ask them, you know, why do we see a decline in our busiest season in the fall? Could they give us details? I just wonder if they got it wrong. So.
Right. No, they won't give details. I have asked, and they, you know, they don't share taxpayer information. You know, I worked in another state where we had the ability on the local level to audit. The state still collected, but we were able to audit, and you can't do that in Massachusetts. So it could be that, you know, people they're not current with those taxes. I do know the governor has given some extensions. I don't know which extensions. I don't know if they, off the top of my head, if they would apply to any of these taxes, but it could be that. But it also could just be that people are delinquent in paying their taxes. That happens with businesses as well.
Right.
So
okay, I just was curious. Thank you.
So then, you know, as we're projecting the $1,882,000 in reductions in revenue, we then were able to go and look at our projected expenditures again. And the first place that I started was with the non-guidelines accounts, or the fixed costs. Just like we project the revenue in September and October, we also project our fixed costs in that time period as well, because then in October, I talked to you about what's available for guidelines. So I have to have the fixed costs projected. So I think the one benefit of having town meetings so late is that we can now go back and make some adjustments or we're really forced to go back and make these adjustments. And, you know, fortunately, we have $367,000 worth of adjustments that we can make. And they are in group insurance. Our plan year is June 1 through May 31st. We receive our renewal in February. Typically, it's too late to do anything, but I don't have open enrollment until April. But now I have my premium renewal. We've had open enrollment. So I'm able to go back and make some adjustments to my earlier projections, and we can save $238,000. On the retirement assessment, we're able to save.
Carrie, just 1 second. Would that be a result of lower than expected premiums?
It was both the result of lower than expected premium, or the premium renewal, and we had some fluctuation in enrollment as well.
Thank you.
We also, I didn't know if the incentivizing higher deductible plans, I thought we had some migration to lower cost plans as a result of that effort.
Yeah, we definitely did, and Jared mentioned this in his budget presentation, because the district also participates in the district is part of the consortium that we purchase insurance from, and they follow whatever changes that we make. So we have, over the last several years, I've talked to you before about the fact that we introduced the high deductible plans, and we have incentivized those plans. We've done an incentive package each year for the last 2 years to try to get people to move to those plans. And we've had a decent amount of success where there are 17 or 18 communities that are part of the health insurance consortium that we belong to. And honestly, the town, CPS, and CCRSD are really the only entities that have any enrollment in these high deductible plans. But we've spent a lot of time educating employees about why, in almost every case, the high deductible plan is to their benefit.
Just to be pretty clear, the benefit that Jared may have mentioned really only pertains to the district. When we take some of this, it flows through to the town's non-guideline line, but that also includes the K through 8 teachers and their employees. So
Yes.
this is a combo of CPS plus the town employees, right?
Yes, it is.
Carrie, this is Dee. I have a question on the enrollment, the June 1 enrollment.
Yes.
Were there any impacts from COVID on the enrollment numbers?
In terms of, no, I mean, the numbers, the enrollment was fairly consistent. It was slightly lower than I had projected. We still have, you've probably heard me say this before, we only have about 2/3 of our eligible employees enrolled in town health insurance because the town employer contribution to health insurance is quite a bit less than you would see than municipal employees typically expect. So we don't have the high enrollment. So we do have to be more conservative because at any point in time I could have big numbers of people have a qualifying event and come on to our plan. But I wouldn't say we certainly didn't recognize any change as a result of the pandemic.
Okay.
We have received credits. We just received a credit on our dental insurance plan. So I'm not sure if that's something that you're referring to. We have not received any credits on health insurance, nor do we expect, but we did on dental.
Okay.
Is that because people could not get in to see their dentist? So some of the things that would maybe be included or that would have to be paid out by the plan never got paid out. Like
Right, very similar to everybody's probably got an adjustment in their auto insurance.
Yes.
Same type of thing. People aren't going to the dentist, so that was nice. Retirement assessment, where we are revising this down $20,000, and the reason being is the town has a pension reserve fund that was established in the mid-'80s, and it was a way to smooth out increases in the annual pension assessment. So if you track our pension expenses over time, you can see that our annual increase has always been about 3 to 5%, where in other communities, if you made a comparison, you might see their pension assessments in the last several years going up 9, 10, 11%. So we keep the impact to the operating budget by paying anything above typically that 3% out of the pension reserve. Well, we are now at a point where our actuary has determined that we will be fully funded in 2029. So we took a second look at the pension reserve to do a cash flow analysis to make sure we're taking the right amount out. And when we revised that analysis, we determined that we could take another $20,000 out. So we've made that adjustment.
Okay.
The warrant article that the retirement board presented to you to increase the COLA base on the pension benefit up to $14,000 has a cost impact of $309,000. But we finally determined that even if it was approved at annual town meeting, the first impact would not be until fiscal '22. So we had a placeholder for that, so we've backed that placeholder out. The next item, debt service, our non-excluded debt service. We, again, in the fall, I have to estimate the size of the issue and what I think that, what we'll get for an interest rate and what those annual debt service payments are going to be. Again, because town meeting is so late, we did that borrowing in June. So now I know exactly what those debt service payments are going to be, and I'm able to make an adjustment of $138,000. And then the last item here is the excluded debt service, and this is the annual debt service payment for the middle school feasibility study. Are there any questions on the fixed costs?
So I have a question about the middle school feasibility study piece.
Yeah.
I was not aware, I guess I'd have to go back and just rattle my brain a little bit, that we had appropriated that through a debt mechanism. Is that how we had, we approved, I think, $1.5 million to do a design study, a feasibility study, and then a follow-on schematic design. And was that a debt issue? Was that a debt warrant article to do that 1.5 million, or what? I think that's what the amount was.
It was, and there was a subsequent ballot question to exclude it.
Right. Okay. So it was excluded.
Yeah.
And so does this? I'm just wondering why this is. You kind of have to add it in as almost a surprise to us. I mean, wasn't this something we have been planning for? That if the town voted to exclude this debt, the assumption was, and they were working on very aggressive timelines. It just seems like why is this a surprise that we have to now kind of add it in? Oh, here's 388 that we didn't anticipate.
Well, I would say it's not a surprise. There was a decision made after the guidelines process to permanently finance that debt based on the favorable rates that we expected to be available when we did the issue in June. So we certainly knew that within the next, it was either this year or next year that we would permanently finance that. Because money has been expended, we would have to do a bond anticipation note or permanently finance it. And so because of the favorable rates, it made more sense to permanently finance it.
Okay, I guess, yeah, it just catches me a little bit as an unusual, like, we approved the warrant article, we voted to do this, and the planning has sort of caught us up with this 388 that we have to add back in. That's all. I'm still a little bit quizzical about that, but we'll let it go. I'm not going to belabor it.
Oh, actually, Dean, can I just pick up on that thread, because I'm kind of with you on that one, and I guess would the typical practice be that if we know in June that something is going to be financed through debt service, timing wise, when do we incorporate that into the next fiscal year's projections and estimates as you're developing them? Why wait until past December, I guess, is my question. Because it seems like that's what happened, right?
You're on mute, Carrie. Oh.
No, I'm not. I'm thinking. I'm not. I'm not sure what else to say other than a decision was made in the spring to permanently finance the project because of the favorable interest rates. I understand some people have a different opinion, but I'm not really sure what else.
Isn't it the timing thing?
She wasn't on mute.
Maybe I can ask the question the other way. If we hadn't made that decision, what would have happened to this 338?
Well, we would have had to issue short-term debt, and we would be paying the interest costs, whatever that would be. Because we expended money, we had to have either short-term or long-term debt to cover that expense.
So it still seems to me as though that should be a win for us. If we're not issuing short-term debt, typically short-term debt comes at higher rates, no? So we should still get a win out of it if we go and do the actual debt issuance. So I'm still sort of, I just don't fully get it, but okay.
Carrie,
Well,
the
the decision to issue debt is a decision that is made by the treasurer and the select board.
Oh, no, I'm not questioning that at all, Carrie. That's not my question. It's if we, one way or another, that middle school building committee was going forward with a feasibility study / schematic design. And that was a very aggressive calendar that they were on. So the project had to be funded. And what you're saying is the alternative to what you did do would have been short-term debt.
Yes.
That strikes me as though that would have been more expensive than what we ended up doing. So it still seems unusual to me that we're getting kind of a negative here. I guess I don't understand why it appears on this sheet as costing us more than you had anticipated.
I think it's the first time you're seeing the debt service, Dean. Yeah. It's not this versus the budget. This is the debt service. It's the first time it's hitting.
I know, and my question is, why is it hitting now versus not being baked into the projections back in December when we were sort of first formulating the fiscal year 21 budget? That's my question.
Yeah.
That's all.
I'll let it go. It's okay. I'll just keep pondering. That's okay. We can just move forward. It's okay.
I have a different question, Carrie. So just to make sure I understand it. So these, I'll call them true ups, right? So you had estimates and now, am I right? You would say this is hard. The savings of 367, those are hard savings.
Yes.
You've got them. You can bank them because that's what we're doing here.
Yes.
Okay. Thank you.
I think, possibly with the exception of the group insurance, because this is a better assumption than, that's the result of a better assumption than what was made in September. But we will be reducing the town meeting appropriation by that amount. So, so that it's certainly hard in that sense.
Okay, so that one's still an estimate. The others are hard.
Yes.
Okay, thank you.
Carrie, Carrie, one other question.
Mary's had her hand up.
I had my hand up.
I better get people.
I really have. So, Carrie, you made a really great point at the last bullet on this slide, which is reduced budget assumption almost certainly will result in less free cash. So the good news is that we have better estimates of some of these fixed costs, which means we can have a lower FY21 budget. But the bad news is that we're going to have less to fall over at the end of the year into free cash, right?
Correct.
That's correct. So now you're learning our free cash, how we generate the secret. We generate
the secret sauce, right? Okay, so my question is, will you be able to give us an estimate of what you think the free cash, the rollover into free cash will be for FY21 in time for us to vote on some of the articles that are asking for free cash at this town meeting?
I can give you an estimate, but
yeah, that's all you can do, right?
It will not be certified by the Department of Revenue in town meeting, and I can tell you they sometimes do crazy things with the certification, but I certainly can provide an estimate.
Okay, is it true that we usually assume that there'll be about $1 million because we every year we use $1 million of free cash with an assumption that we'll get back $1 million at the end of the year? And this year, I think you already did this once for us, and I thought you estimated about $500,000 at the end of this year as opposed to the $1 million. Right. Right. And you'll see in a couple of slides going forward that $500,000 is really more like $712,000. Okay. So, if we could have that for our discussion of the articles that are asking to use free cash at the hearings, that would be really helpful. Yeah. Okay. Thank you. All right. So after we make these adjustments,
the balance of adjustments that are needed, we're now down to $1.5 million. So we then took a look at, when we did this, we were still in fiscal 20. We took a look at fiscal 20, made a better estimate on how we thought we would close that year, and then began another pretty in-depth review of fiscal 21 of the original budget proposal to see what we might be able to find, keeping in mind how the pandemic has impacted our operations. And so there are 6 items here to close this remaining gap, which I will go through in some detail in later slides. But when we put this together, came up with $1.8 million worth of reductions. And as the town manager mentioned, leaving about $300,000 in so-called surplus to, as either a cushion if anything might change between now and town meeting, or as an amount to further reduce property or to reduce property taxes. I did make a note here that the schools there, and you heard an extensive presentation from them on Tuesday, so they have a lot of things in flux as well. But at the time this was put together, the 6 items that we had were the remainder from fiscal 20, a reduction in salary reserve, a reduction in capital outlay, a reduction in or removing the funding for some vacant positions from the request, small reduction in street lighting. And at the time we put this together, CPS was showing a revised budget with a small reduction of $5,600. So first, we'll start with the fiscal 20 remainder or unexpended available balance. So we closed our expenses with $755,000 remaining in an unexpended appropriation. We also identified $256,000 worth of expenses related to COVID-19 from the general fund. The town had more, higher number of expenses, but the general fund expenses for COVID-19, $256,000, and we have a grant. We can apply those to a grant. So we add that back into our potential fund balance. We also had a revenue deficit, meaning we collected in total $400,000 less than what we estimated. So in order to, if we did nothing to sort of cover that deficit, we would be eating into our free cash in a way that we didn't intend, because we intend to collect 100% of our revenue estimates. We also have $100,000 in prior year encumbrances. So we have an encumbrance process. If something is in process at the end of the fiscal year, we encumber the remaining funds with that project. But then when the project is closed out or the purchase has been made, sometimes there is an amount remaining. And we looked at all of our encumbrances where we had completed the purchase or the project, and there's about $100,000 that we are able to release. And so in total, these are $712,094. I just put some questions that I thought maybe would come to people's mind. Why do we have anything left in the fiscal 20 appropriation?
So just raising my hand for a second.
Oh, sorry.
We had extensive conversations about trying to push some legal expenses into the next fiscal year. And you said we could not do that. We could not bill or pay in a future fiscal year for some other work that was part of the project. So is this I'm not sure how this differs from that. In other words, the project continues,
yeah,
and the work is being done in 21, but you're still using 20 funds to pay work for work. It's kind of the opposite, actually, of that.
This is typically with, you know, if we had, and this often happens with a legal bill, that we incurred expenses in June, but we don't receive the bill until July. It may be in August.
I see.
And encumber if this happened in fiscal 20, we could encumber in fiscal 20 for that June bill.
But the work was still something that occurred within that fiscal year.
Correct.
It's okay.
Correct. Sometimes with equipment, particularly with public safety equipment, there's really a long lead time. We may order something in March and it's not delivered until September, but we would, because we signed a contract for the purchase of that equipment in March, we would encumber the fiscal 20 funding to pay for it, even if it came in September.
Okay.
Yeah.
All right.
Okay, so
minor points. Okay, thanks.
So we have remaining unspent appropriation in fiscal 20 because we had buildings closed, we had lower utility costs, we had reduction in purchase of supplies and services, particularly custodial services. We have you know, contracted custodial services that weren't being used when buildings were closed. Part-time staff not working, so not being paid. So through a combination of a lot of things, we had unspent appropriation. This is not, it's not unusual. Mary, as you said, we sort of each year seem to have about $1 million increase in free cash, and it's because most of the time our revenue comes in higher and our expenses come in lower.
Right.
Particular year, our revenue didn't come in higher, but our expenses came in much lower than they typically would come in because of the pandemic and the closure of buildings and services. So the next question, why won't this close to free cash like in any other year? So in recognition of the pandemic, the legislature has granted special authority, special one-time authority to cities and towns under Chapter 53 of the Acts of 2020 to allow municipalities to recapture this unspent appropriation and to reappropriate it for fiscal 21. So the process here, so essentially what they're allowing us to do, because if we didn't do this, it would fall to free cash or fund balance for accounting folks. What this law allows us to do is to designate or restrict a portion of that free cash fund balance to reappropriate. So the process is, we have to go to town meeting and we would present a request for $712,000 from free cash, representing the unspent portion of the fiscal 20 appropriation, and use that as a funding source for the fiscal 21 budget. So we're not encumbering it because it's not related to a service or a purchase from the prior year. It's related to the current year, so it has to be reappropriated. Then the downside again is if we go through this process, then there's less of a chance that when we close fiscal 21, that we're going to have amounts remaining. Mary, you.
Okay. So basically what this is doing is it's saying some of the savings, there are several things in play here, but the state is allowing us this one-time opportunity to use free cash to cover our FY21 budget. Is that without it being certified?
Yes.
Right, okay. So we've got two things that are hitting free cash that wouldn't be happening in a normal year. One is that we're going to use $712,000 of it to offset our spending in FY21. And we're also going to have a lower amount at the end of FY21 than we normally would have because we made better estimates for our expenses.
Correct.
Okay. Okay. So we're digging into free cash.
I think that's the short answer is yes.
Yes. Okay, thank you. Okay, thank you.
But
I'm sorry, so
where the rubber will, I think, meet the road is when we come to the April town meeting, and where we usually have an article that says, yeah, take $1 million of free cash and try to reduce the tax bite. If we want to have an article like that, it will be actually reducing free cash. I mean, it's going to be as opposed to sort of a merry-go-round of we found $1 million here, we're going to apply it to the tax to reduce taxes.
You're right.
Now we're going to have to kind of dig into this into the seed corn a little bit more.
It's true that we're starting to dig into free cash, and we might decide in April of 2021 that we want to continue that, but that's what free cash is for.
Yeah.
So, but we'll talk about that.
These are extraordinary times. So
and that goes back to Mary's earlier comment, because we already have, I think, at least 2 warrant articles. We have $2 million for middle school stabilization. We have $500,000 for affordable housing. Those warrant articles assumed a certain level of free cash, which, as we can see, we're eating into. So
and we have 200,000 for healthy buses for students.
Right. We're going to have to look at all that.
And I'll continue to defend the stabilization fund for the middle school, because in effect, all that's doing is tagging the money. It doesn't actually take it away. It just puts
it's all good. I just want to make sure we're going to have to look at what happens to it.
Yep.
Yeah.
Right. That's
so Carrie, after all this is done, this carry forward, the amount of certified free cash from fiscal year 20, will it be 0? What will that amount be?
No, so what I wanted to mention is this $712,000 is not part of the free cash, the certified free cash that you've seen, that you use that number in, as part of your analysis on whether or not it made sense to support or not support warrant articles calling for free cash. This is not going to, if we did nothing, this would be added to that number. So this is not subtracted from the certified free cash that you saw before.
And what was that number? Remind me, was it $1 million even for fiscal year 20?
No, the free cash is about $11 million. $1 million was planned to use in fiscal 21 to reduce the property tax rate. And typically, as Mary said, we often then will see an increase. We'll have about $1 million, and that $1 million we used, it's a wash, because we used $1 million, but we gained $1 million. Okay. So now we'll be using $1 million, but we won't be gaining $1 million.
Okay, so it's a wash for fiscal year 20 is what you're saying, basically.
Yes.
And then for fiscal year 21, we'll have to figure out in April where we stand and what we want to do.
Right.
Well, and we also have to figure out how we want to, what our position will be on some warrant articles in front of us this September that are also asking for reductions of free cash, which is why I asked Carrie if we could have something to look at the balance and what are what's coming in, what's coming out, so that we know where we stand before we make recommendations on those articles.
Yep.
Right. And we, I will take a look at it. I'll talk to the town accountant about it tomorrow. We probably are not going to make any change to what you have seen, because we would expect by reallocating this, the net add to free cash is going to be 0. So we're going to have what we already have, and we're just not going to be adding anything to it. And the information that we presented, we already backed out I showed you a slide that had the certified free cash and showed you, what it looks like if you take out $1 million, then if you take $2 million out for the stabilization fund. But we'll take another look at that too.
I'd appreciate that. Thank you.
Okay, so the underlying assumption of our tax levy and the percentage rise in taxes that we expect to be, voting in when we finish the September town meeting, it rides on the top of $1 million, or I believe $1.1 million, or whatever the numbers we expect to take out And if we just pull the rug out on that and decide, well, we can't take that million out this September, the taxes will rise accordingly. It's going to be not a minimal hit. It's going to be at least 0.5%.
No, I wasn't suggesting that we do that, Dean. I wasn't suggesting that. I was suggesting that we take all these things into account when we look at the other.
I mean, the point of this is we're not replenishing it. By the time we get to town meeting, it's not replenishing this year. We're just going to have to decide based on the balance that we're bringing along with us, whether that balance can support all of the demands on free cash.
That's right.
I think that's
right.
And I think the other component of that is it is our reserve, right? We don't have anything else.
Yeah.
We don't have, at least I shouldn't say nothing. There's maybe a few things Stephen and Carrie will point out to us, but those are our reserves, and we're going to go into a period where we don't know what's going to happen. And so I think it's important for us to look at what's the reserve situation as we go into FY22, and FY21. So I think it is important for us to get focused on that.
Hence Mary's points about the warrant articles in September being very important.
Yes.
Okay. Mr. Town Manager, are you there? And would you like to talk about this slide? To give me a break.
Yeah. So and I don't want to open the discussion. I want to move the discussion forward, but there's reserves like operational stabilization, which are true reserves, and then there are free cash. One of the positive things that we haven't really mentioned is because we have free cash available to roll over, we are able to sustain, our service levels without having to use reserves. And that really is a positive thing that is kind of getting lost in this shuffle. So I want to just point out that those, like going to the operational stabilization fund to offset losses in revenue is an option that we could have presented. We chose not to. And we're fortunate that we didn't need to.
That's good. Yeah, at some point that would be great to sort of explain to us where you think the reserves are. And, I don't know what the Operation Stabilization Fund is. I haven't heard of that one before.
If you look at the management letter, it's usually the statement of reserves is usually a part of that or early in the audit. So anyway.
Okay. Thank you.
So, sure. So there's a salary reserve that provides increases to employees for increased wages and to fund collective bargaining agreements. Right now we have 4 collective bargaining agreements that expired on June 30th. And so we were originally carrying forward about $500,000 in the salary reserve. That's based on increases that are in part merit-based and also market-based. And then inflationary increases and things like that. So we also had some accumulated amounts from prior years that were a result of settlements being more favorable than what was estimated in the budget. And then, there's been significant attrition. So as people, and I said this back in February, when you have a 30-year employee at the top of the scale retiring, and then you bring in somebody new, there's a savings there. So that has been a factor in our ability to have some carried over salary reserve. So, what we've made the decision to do is to basically have the amount of salary reserve accounts. So we're taking 250,000 of that 500 and putting it back in to the budget. And we're going to design a compensation adjustment that's basically, sorry, I don't know if you guys can hear the motorcycles rumbling by, but hopefully not. So that we'll do an inflationary adjustment to compensation kind of across the board, and not do the other types of increases that are merit-based. And then we have to obviously do those collective bargaining agreements as well. But we just thought the situation with this year was extraordinary. And even though town employees have really done a remarkable job, continuing to serve the town and the town's people throughout the pandemic, by and large, people were able to keep their job, and it has been a benefit to them. So a reduced compensation adjustment is a reflection of that. The other part of the other kind of outlying thing on this is before COVID-19, we were working on funding a kind of across the board compensation and classification plan review. It's been some time since that's been done in the town, and a recent law in the Commonwealth called the Pay Equity Act has really reshuffled the deck in terms of how all organizations, not just towns, need to think about compensation. So that is a tertiary factor in what we're projecting for salary, but we feel like what we're doing takes care of the taxpayer, but also provides an opportunity to take care of our employees as well.
I have a question, Stephen. The word reserve has got me wondering, is this an account that has a reserve and now you had originally intended to put 500 more into it and now you're only going to put 250 into it? Or is this an account that's actually spent every year?
It's spent in part. And so we have had years where there have been carryovers, if you will.
Okay.
But that's, again, part of budgeting conservatively is, and you all know this, when you get to ask for money once a year, you have to get it right. And it has to cover a lot of expenses that you don't know when you're asking for the money. And one of those things is often collective bargaining agreements aren't settled before a town meeting.
Right.
And so, and like I said, you don't know in April who's retiring in the following fiscal year. Like, are you going to have an easy time reaching agreements with unions? Are you going to have to go to arbitration? Like, none of these things are known. And so you take a conservative approach, meaning you maybe put in what you think would be the worst case scenario for exposure on a wage settlement. So you don't have to go back and ask for more money at a future town meeting.
So
when things work out for the best, you have left over.
It goes to free cash. So
or encumbrance.
Right.
Or,
So
okay.
The intention, Mary, is that it is a budgeted, appropriated account tied to that fiscal year. So it's not a reserve in the sense that you can keep adding to it each year. But what happens is, typically with collective bargaining agreements, or often I should say with collective bargaining agreements, they don't always get settled in a fiscal year. And it might be the following fiscal year and we have a financial obligation to the prior fiscal year.
Retroactive.
So hold the reserve to cover that. But, if all goes well, it's appropriated and expended in the same year, and then anything remaining closes to free cash.
Okay.
Any other questions on the salary reserve before we move forward?
Hey, Dean, I think we've got a Q&A.
I'm not sure that particular item is where we are, and it's from an attendee. So I'm going to ask for those to come in when the presentation is over. Right now, we're in the business piece of the meeting. So, I just feel like it's not like a Q&A with the public right now. They'll get their opportunity, but I'm holding that in abeyance. I see it there.
So then the next is our capital outlay plan, or the cash portion of our CIP. The original recommendation for fiscal 21 was $1,787,000. The revised request is $1,081,000. Because of the pandemic, or I should say, on an annual basis, we fund capital outlay. Because of the pandemic, there were several projects and purchases that we were not able to complete in fiscal 20. Some of them are for, such as the townwide technology fund. On an annual basis, we budget a certain amount of money for the upgrade of computers and laptops and software. So it's a recurring item in our outlay plan. So there's no need in this particular instance to fully fund the request because we have $70,000 remaining in that for those technology purchases. So that is one example, but in total, the amount of the fiscal 20 outlay plan that is unexpended is $475,670. So the first step to revising our outlay plan is to subtract those items because that money has been carried forward for those purposes and we don't need to refund.
Is that carry forward model part of the 712 that you just talked about where something didn't get expended, but you can now apply it because you're moving it instead of letting it fall to free cash? Is it part of that?
No, it's
No.
not part of the operations. It's part of capital. So it's not part of that 712. So the calculation to get to 712 was on the operating side of the budget.
Okay.
Of all of our capital accounts.
So this is another point at which an FY20 appropriation is not expended and somehow it's drifting and we can use it in 21 without having it just drop through and become free cash. Is that true?
It is. So one of the conversations that we had a couple of meetings ago had to do with the warrant article for the capital plan. And you noticed that in fiscal 21, we've included both the outlay and the debt capital projects in one warrant article because the more correct way to handle this is to have these in a standalone warrant article so that they don't close to free cash, that the funds are available until the purchase that was authorized has happened.
Okay, so capital appropriations have a multi-year arc. They can, once they're appropriated, they're earmarked and can be expended against that appropriation whenever the actual bill comes due.
Right, so the only financial articles that expire at the end of the year are budgets. You know, if we appropriated $2 million for, back in 2017, we appropriated $1.5 million for technology in a standalone article. Those funds are available as long as there's money in that article. That article doesn't die at the end of a fiscal year. It's open as long as there is funding associated.
Okay, all right, clear enough, yep.
So then we made some additional adjustments of about $230,000 in certain areas. And on the next slide, I've just highlighted what those are. So technology, we had $195,000 in the original ask. We're now revising that down to $0. We have $70,000 that we carried forward from last year. We also have about $165,000 in prior year encumbrances for hardware and software upgrades. So we're not, I know there was some concern expressed at the select board meeting that, you know, why would you, of all times, why would you take money out of technology? We are proposing this reduction because we believe we currently have enough authorized to meet our hardware and software replacement program. We also have the 2017 special town meeting article to advance big initiatives. The licensing and permitting software that is in process. The next project up is the replacement of our financial management software. And then the third project is likely records management. So we feel that we have sufficient funding to continue to move both our hardware and software upgrades portion of our technology plan and our major initiatives. We also,
Right, and so it's just another point on that. The other thing is our view of technology and how we use it for town operations has, like many of you, has shifted dramatically during the pandemic. And so we are making technology upgrades that are likely to be funded through the CARES Act that are, that will provide a benefit that will extend beyond COVID-19, but are needed as a result of it nevertheless. Things like upgrading our phone system, upgrading, providing more laptops for telework, things like that. So we are making investments in real time. We just think that we'll be able to receive funding for that through the CARES Act. And once we have a new CIO on board, our vision of where our technology, like our philosophy on technology and equipment, may shift as a result of both a new vision and the pandemic. So that's one of the reasons why we felt comfortable making that reduction for FY21.
Stephen, can I ask a question about the CARES Act?
Sure.
Given that the CPS is basically a town entity, does the CARES Act distinguish and create separate appropriations for direct assistance to educational budgets and a separate one for general government, or does all of that come in one lump sum to take care of these both of these accounts? How is that done?
I think they're separate, aren't they?
So we and
it's a good question. I've never asked.
I'll just jump to this last slide and then I'll go back. So the town was notified that almost $1.7 million was earmarked for Concord under the CARES Act. And it can be used either for town expenses or school expenses. And you can see up in this corner, in fiscal 20, in total, all funds, all activities, we have $388,000 worth of expenses incurred by town, CPS, and the enterprise funds for which CARES Act grant can be used to reimburse. So I did hear in the presentation on Tuesday that both CPS and the district also have CARES Act funding. So we will have to coordinate and see, make some decisions about how these funds will be allocated. But there is no restriction against us using this 1.7 either for town or for CPS, not for the district, but town or CPS.
So go ahead, Dee. You have your hand up.
I was going to ask, do you have restrictions on what the CARES Act will cover in the town? I know that the CPS and the regional high school have specific things they can use, specific items for which the CARES Act funding can be used. Have you received a list like that for the town?
So yes, we know, and I've identified here on the slide, what we have been told is any necessary expenditures incurred during the pandemic response during the period of March 1 to December 30, 2020 that were not budgeted are eligible for CARES Act reimbursement. So we have purchase of supplies, PPE, about half of the expenditure is for supplies, for purchase of supplies and services. And the other half is overtime for public safety for pandemic response.
Yeah, it's loss of revenue is not an eligible expense, though. That's a key thing with the CARES Act is, like, say, could we use CARES Act to offset our loss of excise taxes?
Right.
That it's a hard no. In fact.
Can you hire short-term personnel with it?
Yes.
You can.
Yes.
Okay.
Yes.
But only for response to pandemic and public health activities, not.
Well, in any municipal response,
Capacity.
not just say public health.
Yeah.
I understand, but it's the pandemic related stuff.
We saw with the schools that they have a specific dollar amount per student that they're expecting 200, I believe it's 225 per student. So they've calculated what that's going to mean. And that sounded to me like that is above and beyond this 1.6. So,
Yes.
you know, given all of that, the community is in line for well over $2 million of CARES Act, you know, support. That's very good. That's very good.
I guess my other question would be, will you be recognizing any of these expenses in a specific account? Because for accounting purposes, will you have to be reporting this back to the state?
Absolutely. We've already met our auditor. We've already had a meeting with our auditor. So we have very detailed records on what these expenses are. We will be required to supply, you know, invoices.
Okay.
In terms of the overtime for public safety, we are required to submit a document outlining what the process was. So for instance, at the fire department, we have 2 fire stations are assigned to each of those stations, but when there's an overtime shift available, a firefighter that might work on Walden Street could take a shift over in West Concord. During this pandemic response, the chief initiated a new procedure or policy that the personnel couldn't go back and forth between the stations. So that increased the overtime because they typically, he has a certain number of personnel that run between both stations, and he could go down 1 or 2 their station and not call in somebody for overtime. But because the stations personnel were isolated, his overtime costs increased because he couldn't rely on personnel at the other station. So we have to document that policy and identify what the costs are associated, and those are reimbursable.
Thank you.
Okay, I'm gonna just go back here to capital. So that's technology. We are also proposing a reduction in resource sustainability, or our green initiatives, of $50,000. One of the reasons was because we have $36,000 in prior encumbrances to do projects. And, you know, I think the one thing we haven't mentioned is town meeting will be in September. We're still in pandemic response mode. We will only have 9 months of our 12-month of our year to complete any capital, because the capital purchases are not part of our 1/12 budget process. So we have 9 months to do this plan. And so we have, in recognition of that, we've made some cuts. And this is one that was proposed in the fiscal 21 outlay plan. There was $50,000 for a project, it was a historic preservation initiative, working to develop a best practices manual or a template for sustainable initiatives in historic structures. So it's not that this is any less important than anything else, but in recognition of the time available, it made sense that this project might be better in fiscal 22 as opposed to fiscal 21. And then the final reduction, $50,000 in vehicles and equipment for public works. This will mean the deferral of a purchase of a trackless unit. So the CPW has made some adjustments in their proposed purchases, and this cut will result in a deferral of a purchase. So then we also took a look at the other part of our CIP, the debt portion. And although any proposed cuts in the fiscal 21 debt portion of the capital plan, they won't have a debt service savings associated in fiscal 21, but they certainly will in fiscal 22. And at this point, we have every reason to expect that fiscal 22 is going to be at least as difficult as fiscal 21. So that the proposed cuts here will result in a savings in fiscal 22. This chart shows the original proposed project by year and then the revisions. And the revisions, those are not decreases, that's the amount. So the first item, park improvements for Emerson Playground, we originally proposed $200,000. In the revised debt plan, we're also proposing $200,000. So that's how to read that. And then we've also added another column to identify the CPA funding that is proposed in the current year CPA article, so that you can see what is available, both proposed in the debt plan and CPA. So in total, we originally asked for $5,250,000. The revised ask is $3,725,000, or $1,525,000 lower than the original. The estimated debt service savings in fiscal 22 for this plan is about $250,000.
I have some questions. Should I ask questions now about this capital plan, or this is the appropriate time? Yes.
I think so. I mean, we can see the fiscal 22 and 23 through 24 and 5.
You want to do that first?
We're focused on 21 for now, so I think this is a good point to ask.
Okay. First of all, I want to thank you for the changes that you've made with the Giroux project. I think you've listened to the community, and I really appreciate that.
I would second that too, Mary.
I'm sorry?
I would second that.
Thank you, John. I've got two questions. My first question is the Emerson Playground. I go there often to walk my dog, and I noticed that there's a fence around the play area. And so I guess my question is, why the fence, and what exactly are we getting for the 200,000?
Do you want me to answer that, Carrie?
Sure.
Yeah, that'd be great.
Yeah. Hi, Kate Hodges.
Hi, Kate.
How are you?
Good.
So the fence is temporary, obviously, when you can see it. And it is to comply with the camp guidelines, because we, under the COVID guidelines for having either childcare or camp right now, cannot have a playground be accessible to the public and to the camp kids at the same time. And so what we have done is we've put the fence up, and every morning between 6 and 7 o'clock in the morning, it is sanitized by the Parks and Playgrounds division. And then the camp kids play on it. That is, we're not naive. We recognize that members of the public may or may not go over the fence, but that's our best effort to try to comply with the guidelines. So it's closed to members of the public during the camp, and then use at your own risk on Saturday and Sunday, and sanitize first thing on Monday. However, camp only has 2 weeks left, and so you will see the fences coming down once that's over, although we will continue to sanitize every other day, just in an effort to try to keep up on it. You'll also see the same fencing at the Alcott School, and
Yes.
Some around the Ride Out playground, although we've been unsuccessful with having the fencing around Ride Out stay up for a period longer than 24 hours, but we're doing our best.
Okay.
And as far as the $200,000, that goes back to a very large scale renovation project that was proposed by CPW back beginning in fiscal year 18. And they have been asking for small amounts of money to save so that they could repoint and regrade the outfield of the larger 90-foot diamond baseball field that basically the backstop is adjacent to Stowe Street. So that one that's right next to the basketball courts.
Yep, I know.
To repair some of the irrigation systems and the irrigation heads there, and to be able to repoint and redistribute the water basin that is actually fed from the well to the splash pad, which is actually an old concrete splash pad if you were to walk on the Hunt Gym side gymnasium entrance, but continue going straight as if you're going to the playground, there's a few small areas there. It right now, because it's not running, it looks like a small concrete circular pad. That's actually a spray pad. And what happens is that the water is fed from the well, it comes up and then just runs off. And so we're looking to be able to have a catch basin below it, which can catch the water as it comes out, treat it, recycle it, and go back in. It'll be a great savings for water. So those are the three major parts of the project. And then depending on the funding that they get from CPC, which they were not successful this year, but I believe will be reapplying for fiscal year 22, they're looking to slice seed and repoint the field that is in the center of the track that's there.
So this money will actually be spent and there will be repairs made?
Yes, this is the last $200,000 in order to get the minimum amount so that they can accomplish phase one.
Okay, so this isn't just more bankrolling. This is actually work's going to happen.
That's correct.
Okay, good. Okay, and then my second question, I'm looking down at White Pond, the 600,000 in White Pond. I went over to White Pond recently and I found out that I can't actually use it unless I want to pay more. So I'm actually wondering what is the general public going to get for that 600,000 at White Pond?
I think I need to understand you need to pay more, meaning that you need to have a membership to get
or a day pass or something. Yeah. So I guess this is my question, right?
Yeah.
The White Pond is you're collecting user fees for the people that actually enjoy White Pond, right?
Just for swimming.
Okay, but then there are things that you're doing that everybody can enjoy, and other things that you're doing, I'm assuming, for ADA compliance and things like that. Is that?
That's correct. Yes.
Okay. So is it safe to say that the money that's being spent by the town for White Pond will be able to be enjoyed by everyone in the town? Without having to buy a subsequent membership?
That is our hope. However, you may or may not recall when the issue of accepting the gift was proposed at a special town meeting, one of the items that was brought up both in the public hearing prior to and then I believe on town meeting floor was that folks didn't want to have an increase in their tax dollars in order to pay for the lifeguards and the staff utilizing the beach because they simply weren't planning on using it. And so what we did was a bit of a hybrid, which is that you pay for a swimming pass, not a parking pass necessarily, where you are essentially paying that fee into the recreational revolving account, and they're using that money alone to pay for the staff and any other items that are needed for running the beach. But as far as the premises, including parking, accessing the water's edge for fishing because of it being a state great pond, and any other things that are involved in the park parcel, which is basically what we're calling the hill right now, those would be free and open to members of the public. So there's about a 10-week period in a normal non-COVID year where there's swimming allowed, but our goal is to keep the park part of it open year round, including for snowshoeing and ice fishing and other things like that. But the money that we're allocating is really to stormwater management, and that was sort of at the request and in conjunction with the White Pond Association, both when they gave us the gift and then the people that are on the committee now. We've actually scaled back that project quite a bit. Initially, it called for restrooms, et cetera, and we're really getting rid of that and really just doing ADA and stormwater. And yes, I believe that would be enjoyed by all, although I can't say how many people would utilize the property if they're not swimming on it, but I do know, just based on basically owning it and operating it for the better part of a year now, that there's quite a few people that visit the property that have no intention of swimming and just are enjoying it.
Okay.
I'd also like to add to that, am I muted? No. I'd also like to add to that when we went through the process of acquiring this, even though it was a gift to the town, that it was represented that capital improvements would be above and beyond the operating of it, the operating being done through a fee-based structure, but the capital improvements would be on our dime for the town. So I get your point, Mary, but I think we agreed to that as a community.
Well, actually, Dean, at that town meeting, they estimated the capital improvements would be about 1.6 million.
Yeah.
And if you look right now, we're coming in closer to like 2.3, even with some of these scaled back numbers. So we're still above that. You're right. We knew we were going to have to spend some capital, but
Yep.
we've gone over that quite a bit.
Okay.
Well, you're actually going to get a revised estimate in the upcoming weeks because we have since abandoned the idea of underground utilities and an expansion of the restroom facility. And so I think, Barry, you're going to find that the estimate is more in line with what was presented simply for just stormwater management and ADA access. Yep. Now, that being said, I'd like to reserve the right to come back in a year, 2, 5, and ask for a restroom facility because I'm not quite sure the restroom trailer is going to fit the bill, but we're willing to let it ride for a number of years and see how it goes.
So did I hear you say that you're going to revise this 600,000 or?
No, just the total estimate for the total project cost because we're actually, it was going to be phased into 2 phases and now we're going through 3.
Got it. Okay, thank you.
So,
Hey, this is Dee.
Oh, go ahead, Dee, go ahead.
I have a couple questions for you. One, the ADA compliance, is that for the walkway or what will that include?
So it includes parking and a loading and drop off area, which we don't right now have existing as code compliant. It includes an ADA accessible picnic area that's at the top, which we currently don't have. An ADA ramp that is at a 5-to-1 slope, which we don't have right now, that is current from the top of the driveway area down to the water's edge.
Right.
And an ability to get a wheeled vehicle or some other type of assisted walking device down actually to the water's edge.
Okay, good.
So it's quite extensive. When you see the plans, I think you'll see it's about a 55-foot drop from the parking area to the water's edge. And right now you have to traverse somewhere between 45 and 53 steps, depending on how you do it, at a 55-foot drop. And so that's pretty significant. So
the slope.
Yeah, the paving has to be as a 5-to-1 with railings in some slope areas. So I think that's what you're seeing on the plan.
Okay. The other question I have with the stormwater drainage, does that involve the area, does the state still own the access where boats come in?
So the state owns it, but the town entered into a usage license and management agreement around the same time that we acquired the property, because the state has essentially said the way that it sits is the way that we're going to keep it, and we're not allocating any monies to repair it. And I think for a long time, the former town manager was waiting for them to change their mind. And frankly, we've waited quite a long time, and I don't think they're changing their mind.
Right,
and so, at the bottom of that ramp, there is a grate system, if you go down and see, and that leads to just one stormwater infiltration basin. And that infiltration basin is definitely not sufficient enough to get the runoff both from the roadway, but also from the hill. And so what we're doing is we're looking at revisiting that. We're going to integrate that into the property next door. So the beach parcel, and have a different infiltration basin that basically has a pond at the top, or a quasi pond, a eutrophication pond at the top. And then several different pods of rain gardens and other stormwater management systems that then feed down into a basin that will then go back into the groundwater aquifer, but won't necessarily run off into the pond.
Okay, and the state is not participating in any of the cost associated with that?
No, they are not.
Okay, thank you.
You're welcome. Thank you.
Thank you, Kate.
I have a question. If we can return to the question of Emerson, there are 2 line items on this, one for the playground and one for the field, and you described the funding as a rather sizable project to basically regrade the 90-foot diamond and sprinklers and, and fix the splash area. But you have a requirement to get the underlayment underneath the playground area up to code. Is that on this 200,000 or what? Because I didn't understand how that's going to get accomplished.
Sure. Yeah. Great question. So the state around November or so of last year stated that playground safety fiber, which is a mixture of chipped up tree bark mixed with sawdust, was no longer going to be deemed accessible. And so any playground that was open and accessible to the public needed to have either pour in place rubber or another type of synthetic mat system similar to what you would see at a deck hockey or street hockey arena. And that was independent from Emerson's overall master plan, which was begun and done by former CPW Director Rich Rain. He began that in 2014 and had an entire master plan done. And at that time, this wasn't something. So we're taking this separate from that. Now, because of COVID, the state has said that they were going to delay the requirement for that for a period of 1 year, which is why you see that being pushed out. But it will and continues to be a requirement that we need to adhere to that is independent of the overall sports field and splash pad area.
So I guess I still remain a little confused. The money that's on the sheet shows playground at 200,000 and park improvements Emerson Field CPW is pushed out multiple years. It doesn't come in until 24. So are you pushing out? I just don't understand. Are we pushing out the 90-foot diamond and the sprinklers and all the rest of that, or are we pushing out?
In a way, what I can tell you is that going through the encumbrance process, there was quite a few line items in the encumbrance that were able to accomplish what they are considering to be phase one. And given what it's taken to get done Cambridge Turnpike and some other very important projects, they're not able to dedicate as much time. So they pushed that out a couple of years because I believe they're able to accomplish what they need to in the interim. Aaron McCloskey, who is the Highway and Grounds Superintendent, is planning on dealing with the irrigation and the splash pad first. That is a different direction than the former CPW director was going to do. He was going to deal with the fields and the ball field repositioning first.
My question. Thank you.
Pardon? Okay.
The answer is there's funding for all the stuff you were describing, even though there's no line item for it in this year's budget. And any further stuff is a few years pushed out, and the 200 is to fix the actual playground underlayment.
That's correct.
Okay, so that clarifies that, because when you described it before, you didn't even talk about that, and you talked about all these other things, but the line item had money in the kind of a different place.
Yes, I'm sorry. I consider them two separate. I get it that they're at the same address, but they're just two separate things in my mind.
Yeah.
Okay. Yeah, I think just to go back, Kate, I know the CPW had encumbered some money of their own in the past, but they also received funding from the CPA.
That's correct.
For the field. So that as you are making these new improvements that are different from what had been presented prior, I'd advise you to make sure that the CPA is well informed of that and that you supply whatever progress reports you can make to them, because that is probably still on their books. And
yes, I'm sorry. Perhaps I wasn't clear. All of the money that was received from CPA is still being spent on exactly what was intended in their application. And we had to actually file, and they were due 2 weeks ago, progress reports, and all those progress reports reflect this. And at the time, the revised debt plan was not set, but we were very open and honest about what we were going to be revising the debt plan to see. And so everything that we thought that we would be able to accomplish, we've been very clear about phasing it, adding an additional phase, possibly two.
Okay, and
so
any
we've been
changes?
We're not changing any of the ask. No, we're not changing
No,
any
not
of the
changing the ask, but in addition to, with regards to any changes to the plan that was originally proposed, such as the irrigation plan, those changes will be identified in your new progress reports.
Yes.
All right, good.
I'm sorry, I don't want to belabor this, but I'd like to get it clear so that we don't go through this again at the hearing. So Kate, the 200,000 that I see in front of me in FY21 revised for the Emerson Playground is actually for the surface of the playground. Is that correct?
That's correct.
And that you said that you've actually gotten some reprieve on that you don't have to do it until November of next year. Did I hear that correctly?
We have to have it by July of next year.
Okay. And then Emerson Field, which we see is 0 in FY21, 22, 23, 24. That's money that you already have. And in fact, I know it's 500,000 that you've gotten already, and that's going to be spent in FY21, but you've already got the money appropriated.
That is correct. And they have more than 500. They have somewhere in the neighborhood of 1.5 million.
Ooh, right. I didn't know that. Okay. I got it.
And just to, I'm paying attention to the Q&A chat piece. And since we're on this, I'm just going to bring up a note that's being offered by one of the public. And that is, would it be a less expensive solution to provide ADA access to the beach by just having an expansive way to drive down that road and get to the beach and have a drop off at the bottom of the county road, rather than have a circuitous route down from the parking lot? Is that an alternative to building a very elaborate ramp system?
Sure. It absolutely is an alternative. So the way that the parks crew and I, the way that we deal with park planning is we use a universal design instead of ADA design. And so universal design includes those with limited mobility or something that we call temporary limited mobility, which includes someone that is in a cast or a boot, someone that is temporarily enabled, someone that has a stroller or young children, a wagon to pull down, other things. And so those are really what we're seeing as folks that are utilizing that property, particularly the property closest to the beach area. And so we're trying to make that open and accessible for them. In addition to that, we are not able to expand. So if you were going to be standing at the top of Plainfield Road looking down towards White Pond, we're not able to expand to the right by any means, because that parcel, which is now called Parcel B, has a conservation restriction on it for farmland only. And so the ability to be able to make a turnaround that is both code compliant and ADA compliant would very much go into the area of the beach parcel. And it would be quite expensive because there's a lot of ledge and rock edge there. And there also would have to be a series of retaining walls that would be there. And so when we kind of workshopped both of those, we came out with it being pretty much as expensive, but more maintenance intensive. And so we've decided that this was something that could meet everyone's needs, not just the needs of those in wheelchairs or with walkers.
Thanks. I think that answers it for that member of the public.
So to just finish walking through fiscal 21, the next item where there's a revision is under the fire department ladder 1. We had originally included $250,000 for refurbishment. That has been moved to fiscal 22. So when we purchase fire apparatus, the useful life of those pieces of equipment is 20 years. And at or around the 10-year mark, we do a substantial refurbishment of that equipment. You can see in parentheses the 2012 for that item. That was the year that was purchased. So the 10-year refurbishment would be in fiscal 22. We did originally push this up to 21 because we do identify a target each year for debt spending, and we were under that target, so we moved it up. We are now moving it back to reductions in fiscal 21, and that will not impact the life of that particular vehicle. We have reduced the, in CPW, the roads and parking lot construction, the 2021 roads plan by $480,000. And this really is in recognition that we lost our fall paving season. There's lots of work that's done, but we lost that for fiscal 21. And so we made a corresponding adjustment to the request for fiscal 21. The CPS projects here total $900,000, but in conversations with Jared Stanton earlier today, I note that the fiscal 21 request has been reduced to $830,000. That is not yet reflected in the plan, but the plan will be updated to include, to revise the items included and the total. At this time, are you interested in walking through the out years of the plan, or?
I don't think so. I think we should. With the hours growing late here, let's try to keep.
Good.
All right, and if my slide is not advancing. Can you see the slide vacant positions?
Yeah, we don't need to spend a lot of time on this. We did an
Okay.
analysis of vacant positions that have been funded by the budget. You can see we assigned a ingenious color coding scheme, green, yellow, red. Came up with that all on our own. The ones that we decided for a variety of reasons did not need to be funded for FY21 were basically the funding for those positions was taken out of the budget. That's about $125,000. We may have some additional savings for some of the positions that are kind of on hold. Or I shouldn't say on hold, the ones that we're really looking at carefully to assess, I mean, every position every position that's budgeted is needed to provide some kind of service to the community. But there may be some, by virtue of operational changes or long-term vacancy, and we've lived without it for this long, so maybe we can live without it for a little longer. But some of the ones that are kind of in between that yes, we need this person right away. The CIO being a good example of that. And no, we don't need this person for FY21. There's a number of positions that we're looking at. So we've captured a little bit of savings there. We may capture some more.
So then the next is a minor reduction in our street lighting budget, netting $17,500. And this is the result of an ongoing plan to install energy efficient fixtures throughout the town. We also are relooking at our custodial services, and we are developing a new model to provide those services, and we do expect that there will be some savings as a result, but at this point in time, that plan is still, or that model is still in design, and we don't have any hard numbers to provide to you.
Can we go back can we go back to the previous page, step 4, and it's vacant positions. It has nothing to do with a vacant position, but I'm wondering how, do you hire people for the voting if you have a large number of people who are voting by mail? How is that managed? And do you have to incur those costs, or can they be COVID-related CARES Act costs if you have to hire people for that?
We have election workers that we hire every year. and I believe they're going to play a significant role in managing the processing of mail-in ballots.
You said you have election what?
We hire election workers every year.
You do. Do you anticipate, and that's probably built into your budget, but do you have additional people that you believe you'll be having to hire or
So
that?
the requests for mail-in ballot, that is all being handled by the town clerk staff. And we actually, it is a huge undertaking. We have already received over 4,000 requests for mail-in ballot. If we needed to hire additional staff, that would be allowed under the CARES Act, but we're not anticipating doing so, even though it is a huge undertaking to process. But you know, because of the nature of working with elections related materials, we're managing that in-house.
I mean, we still are going to have in-person voting, so you still, whether you get 1% turnout or 90% turnout, basically you need the same number of people doing the same types of jobs for every election.
Well,
Okay.
if 2/3 of the people have already asked for and voted by mail, then you might be able to consolidate your precincts the way we did for the town election down to the high school or something, and then that might be a reduction.
I feel like we're getting in the weeds a little bit
I do too.
on election engineering. Maybe we could pull back a little
Not a
bit.
major line item on the budget anyway.
Yeah.
Yeah, pull back.
So the last item is the reduction in the CPS budget that was presented at the meeting on Tuesday, and this is as of the end of July. And as you know, there are a number of items that are still under discussion in the school budget, and you had indicated to the school administration that you were looking for at least $310,000 in reduction. So that takes us to the estimated property tax increase. The column in gray is at guideline in December of 2019. The estimated impact to the existing base at that time was 2.8%. That assumed a new growth dollar value of $1.1 million. That has since been revised down to $900,000. And there were also some adjustments that were not, that have been made that were not included, including a final assessment for Minuteman Tech and the permanent financing of the middle school feasibility study, which we have beat to death, I guess. So then we move over to the second column, which is the guidelines. The school committee voted budget, because the CPS budget was over your guideline, and we are required to carry the school committee voted budget in the warrant. So this second column includes the school committee voted budget plus the other adjustments, and that produced an estimated increase of 2.97%. So then we move over to our pandemic revision. It includes the adjustments to revenue, and that brings us to 3.37%. Now, if you go down here, if you assume that the school is going to return savings of $310,000, that would reduce the estimated impact to the existing base to 3.02%. And then if you make a further assumption that the $300,000 that was left on the table, so to speak, if that was eliminated, that would bring the estimated increase down to 2.68%.
Now that assumes that we're taking the 1 million out of free cash still, all of those things.
Yes, it does.
So I have a question, Dean. What is the process going forward to find out? I mean, we got to wait.
Well, you're getting into my chair's remarks, but
Okay, never mind. I'll wait. I'll wait.
I'm happy to join.
Okay, I'll wait.
Get into those immediately.
I'll wait.
Dean, can I was, are there any other questions about the budget?
Well, there were two comments from Matt Johnson from the public, and
I think the first one got answered because we talked about the analysis of the reductions in the prior quarters that were a factor in the 40%, as opposed to 25%. And then the other one. And then
I've just been unmuted, so yes, I can just weigh in on this just very briefly, just to say that I do think that that was well discussed, and that I just hope that it's further investigated why the shortfall in the hotel tax specifically is happening. It's very mysterious. And then my second Q&A was just an observation. I don't think it's important. And then the third about the ADA compliant ramp. I still think it's going to be very underutilized, but that's just my personal opinion. So I think that those are all done, but I did have one more thing, and maybe your chair's remarks will address it, which is just the broader context for this. That FY21 looks great, in all things considered, but further revenue shortfalls going forward, or a much increased level of inflation going forward, which I think is a very high probability scenario, could really disrupt our out years planning. So I'd love to hear responses.
Thank you, Matt. Oh, you need to identify yourself, even though you're a member of the select board. So
yeah, Matt Johnson, 21 Winthrop Street, not yet officially a member of the select board.
Okay.
So I was going to jump off, and there's no other questions on the budget.
I think that's fine.
All right. Thanks, everybody. See you soon.
Right.
Does anyone need anything else more from me?
No, Kate. I think we're pretty good here.
Good night.
Great. Thank you very much for your time, everyone.
Okay.
So, Dean, I still had one question for Carrie on her last slide.
Oh, okay. We can probably bring that back.
Carrie.
Yep.
Is Carrie? Oh, Carrie, there you are. Carrie, if we don't include the $300,257 into the budget, does that just go then to free cash?
No.
That surplus that you talked about.
Right. So we would not be raising that amount.
You would not be raising that amount.
Right. So we would be reducing the overall budget by that amount.
Oh.
So the only way that we could leave that amount on the table would be to appropriate it under a particular line item at town meeting. If there's no appropriation for it, we would be reducing the amount needed for property tax. So we're just showing it because we made cuts further, or we're proposing cuts that are more extensive than the revenue loss, assuming there's no change.
Okay. All right. Great. Thank you.
Very quick question, if I may.
Sure, John.
Sure.
Did I understand this to say, this slide is slightly different from the previous version that you showed us. Do I understand this to say that the pandemic version, revision number 2, would result in an increase to the existing taxpayer of 2.68% as opposed to the original fiscal 21 final guideline increase of 2.8%? So that the levy from the existing taxpayer would increase at a slower rate than originally thought?
Yes, assuming we're able to, that we're not going to need this 300,000, and that the school is going to return cuts of 310,000.
I see. Thank you. That's a very welcome development.
All righty. Can we, yes, Chris. You're,
Dean, I don't know if this is the right time for the question or not, but I wanted to get a better understanding of how we feel about, or how the town feels about what I'll call reserves or cushion in the budget, because I do think FY21 is going to have some contingency to it. So it looks like we stripped a lot of that out, but there may still be some in there. And I'm just trying to get a sense for that. I don't know if that's here or some later point, but that's my question.
Carrie, would you like to try to answer that? We're just looking to understand how much of the contingency that is generally usually in the budget has been fully squeezed out. Like some of it gets squeezed out because of the number of items that you now have more or less final numbers on. But there must be some other places where you're making estimates and there is contingency in the budget.
Sure. I mean, I'm very comfortable with the changes that have been proposed. So because of the way that our budget is appropriated, those reductions I'm able to take in debt service and health insurance because of better estimates. I can't use that for the fire department without going through a process.
Right.
So I'm very comfortable with what has been proposed. In addition, we have a substantial CARES Act grant that can be used for, other unanticipated costs associated with the pandemic. So I think we're to be perfectly honest, I'm not sure how we would spend that money. We went through, 3 or 4 months of pandemic, and across the board spent less than $400,000. Now we have a lot of those supplies. We have sterilization equipment. So it's really an awful lot of money allocated to the town. And, and the school has its own now to address the changes in the educational program. So I do think we're in good shape.
Very good. Thank you.
Any other questions for Carrie on this budget? The next item on the agenda is the tax impact analysis. And I think we really just went through that on the last slide. So Chris, get your hand up again.
I'm really sorry. If we're going to get off the budget, I just have something. It's a comment. I just want to say to Carrie and your team and to Stephen, I think this is a very prudent, thoughtful budget. And I really appreciate the work that you did to pull it together. You did an excellent job.
Here, here.
Thank you.
Yes.
In a difficult time.
Yes. So I think we.
Yay, Carrie!
Yeah. And your manager's not here. He just dropped off.
He's going to watch the video. He'll watch the video.
He's having a drink.
Yeah. I don't know. There's motorcycles riding up and down his street. So I don't know.
I know. Where did he go for vacation? Speedway.
Yeah. So the last slide we covered the tax impact analysis. I had thought we might be, twiddling around in a spreadsheet in a live mode, but I think we're fine with the slide unless anybody else wants to go back to that other approach.
I do have the spreadsheet available if you're interested.
I think you did that. Those numbers are pretty good. I'd like to just move on to my chair's remarks, which really have to do with, what I got tasked. It's only 2 days, so it's not a ton that I have to say here, but I got tasked with writing a letter. I just forwarded it to you all before the meeting started. I try to make a nice little compliment sandwich. Hey, thanks for doing a great job.
It was an outstanding letter.
And here's some tough things we would like you to work on. And thanks for doing a great job. So we'll see how they do. I then joined minutes, the thing hit the wire minutes before the meeting started this afternoon. And I joined it. And they wrestled with it. They are, they're going to come back to it again on Tuesday, but they are looking at our request very seriously. So I think that that, you know, is the best we can hope for, is that they're you know, that they're working on it. Whether we get all 310 that we requested or not is unclear. There are different voices on that committee, but there is an earnest effort being put forth to try and find those funds. The easiest way that Jared, you know, kind of thinking on his feet, spoke about how to find it was really in the district budget. The district, they felt, had a greater level of potential for delivering a fair amount of that money. There's not as much wiggle room in the CPS budget, although they have a, you know, over $400,000 CARES Act separate. This is why I was asking the question about CARES Act. Well, we have 1.6 million for the town, and they have an additional, it appears, an additional $225 per student, and that amounts to over $400,000 at CPS and over $250,000 at the district. So those funds are not yet applied. Carrie was able to apply our 1.6 back to some stuff in 20, but they have decided not to apply any of those funds back to 20, and so for now they're working through our request. Let's put it that way. That's really the extent of my remarks for this evening. And yes, Mary.
Dean, I'd just like to understand the process. I mean, we've put out what we're hoping for, which is that,
right,
at least on Tuesday night, I thought we left thinking that a 3% property tax increase is kind of what we're shooting for. And tonight I'm hearing that there's a chance that we could get it down to 2.68. And I guess what is the process we're going to go through? Or do we just put out this information and then wait to see what the town and the schools come back with? What are your thoughts about that?
The best I think we can do is express our desire and have them, you know, I don't know that we're looking for the town right now to do any more than they've already done. I think that I haven't heard any voices in this meeting saying, oh yeah, look at all this money over here, we should certainly be looking at this account or that account.
No, it's the 300,000 that
oh, I know. So the only discussion that for which we really don't have a process, we're in a touchy-feely kind of a mode at the moment, but is we're asking the schools to look more closely, that they are in charge of their budgets, which have had a reasonable amount of CARES Act money flow into them. And in addition to that, there were FY20 savings for not having to run buildings, for not having to do a lot of things. And they managed to find ways to park money or, you know, fund revolving accounts, do things with money that was otherwise budgeted, because they do not have the budget constraints that Carrie has. They can move money around quite freely. So I think we're just going to have to kind of keep an eye on how their meetings progress. They're meeting again on Tuesday. I do think that they're engaging with our request. And then we have a hearing, and we can express our opinion at the hearing. So I don't know that we're going to call for more rounds of, I don't know that we should call for more rounds of back and forth. If it comes after the hearing that we need to be a little more firm in our request, we certainly have the capacity to have me write another letter and put me up to it. But that's the best I can offer you right now.
That's
I don't really have we're in kind of uncharted territory, and there's really a great process here.
That's fine.
So, and that is the end of my remarks. Let's see what else I've got on my agenda. Nothing really, I don't think. observer reports. I don't know how much, we didn't get much yesterday. Oh, Mary, can you give us an update on how you're doing at filling out your observer card?
I am done. Yeah, I got responses from everybody. Thank you very much. I will be publishing something within the next few days. I couldn't give everybody their first choice, and I think I gave Greg 4 different assignments. Just joking, Greg. But I did have to give people more than one. And if that's going to be a problem for you, let me know, and I'll see if I can make adjustments. But I will get that out. I thank you for everybody getting back to me. Look in your email.
Right. Thank you, Mary. Matt, would you like to wait? I've got one more comment here from the public. So I don't have, I believe, any further correspondence since 2 days ago. But I do have another comment from the public, so I'm going to bring Matt back in. There you are.
Yeah, I just wanted to make sure that we don't celebrate too soon. Again, I think it was an outstanding job to make FY21 work. But again, looking ahead to FY22, if we actually lower the tax levy relative to the original guideline, and we do hit an inflationary situation, or we do have further revenue reductions, then that means that the job is going to get all the harder the next year to raise the necessary funds through tax increases. And so if we're funding that by deferrals this year, that all, any capital deferrals this year that are really taking away things that we will eventually need to buy anyway, again, that's going to roll up an additional future expense potentially. And so I guess it's a subtle thing. And again, it's not a scenario that we know is going to happen. And it's all sort of like, we've heard there's an earthquake. The road looks pretty good right now, so we're just reducing the speed by 5 miles an hour or something. But there could be a cliff, and so I just want to make sure that we're looking at again, not sort of celebrating too soon, reducing the tax levy, and then creating a case where we have to do an override to fund basic operations, for several years.
Well, just to respond to that a little bit, the town has a reasonable cushion of levy limit capacity. I think the last thing we saw was over $400,000 of levy limit capacity. So we have some wiggle room there without having to get to an override, but obviously if taxes go up, it still creates pain. And so we need to be cognizant of that. But having said that, inflation, by its nature, pushes salaries, and salaries are a huge component of delivering education and town services. So fundamentally, if we end up in an inflationary cycle, it is going to put a lot of pressure on tax increases. It just is. So we will have to be very careful with that. So thank you for your comments, Matt. Appreciate it. Now I think we're looking for a motion, it being 9:25. I don't think there's any more business for the committee this evening.
I have a question.
You have a question, okay?
I have a question. Are there no meetings next week?
There are no meetings scheduled for next week. It would be a good idea to just sort of figure out what the school committee is up to. They're going to be meeting on Tuesday. It becomes available very quickly via the MNN YouTube channel, and you would then be able to sort of, kind of maybe move through it quickly to find out exactly, because they may have a full school committee agenda that includes a budget discussion, so you can probably skip forward to the budget discussion if you don't want to watch it live. But I think it would be in your interest to try to keep on top of that, because that is the biggest moving part right now in trying to, keep a handle on where the taxes are going to be moving. So
we're pretty busy for a non-essential committee, huh?
Just, yeah, we have been busy. It's true, John. But I'm ready to drop off. If anybody wants to propose
So
motion to close the meeting.
I believe I have a second, and so I'm going to call the roll, and we should be able to get out of here. Ms. Hartman.
Yes.
I'm Mr. Banfield, the chair, and I vote yes. Ms. Ortner.
yes.
Ms. Reynolds.
Yes.
Ms. Zoll.
Yes.
Mr. Guariello.
Yes.
Mr. Patel.
Yes.
Mr. Hickling.
Yes.
Mr. Swain.
Unmute.
I think he's saying yes. He's
Say yes. Give us a thumbs up. Thumbs up.
Yes.
There it is.
Yes. It's a motion. I so declare. Good night. Thank you very much for
Thank you, Carrie.
another
Thank you, Carrie.
Thank you, Carrie, for all the good work.
Everybody.
Thank you, Carrie.
Very good.